Hi, this is Ken. Welcome back. We're now going to talk about the longer term, what we can expect. And again, in the first section, what we really covered was what over the next 6 months, the first 6 months of 2013, what can we expect in the markets? Now we want to talk about what we can expect, what you should be doing to prepare over the longer term. How do you actually not just survive this, but actually make a buck or two along the way? Kind of putting everything into a very large perspective. There is a tectonic shift happening in the world economy. In 2008, the world was brought to the brink of financial disaster because two mid-sized investment banks went down. What's going to happen when an entire country defaults? Whether that be Spain or Italy or France, all of them are in very deep trouble. Volatility will rule the markets. As we mentioned in the first part, there's no fear in the market. Everyone just assumes that the market's going to keep going up. And when that happens, the herd is generally wrong. Volatility will come back in a very big way, which provides you a tremendous opportunity to profit, but also a lot of risk for the people who are not prepared. And unfortunately, the vast majority of people in this country are not going to be prepared. Government gridlock. We talked about this in the first section with the debt ceiling debate, the sequestration, the continuing budget resolution. Here's why we have a political problem with no political solution. The steps that we would have to take to fix our problems are so radical that no one can get elected going out and proposing these ideas. I will give you some of these ideas here in this section, and when I put them up, at least 60 or 70% of you are going to get really angry and say there's no way that's going to work. And this is the fundamental problem. There's a group of people who believe that government is the problem, and there's a group of people who believe the government is the solution. There is no compromise. And there's not enough data that's ever going to convince anybody who believes one thing to believe the other. We fundamentally have become polarized as a country. Our politics is helping to polarize us. We are going to continue to have gridlock. We will not work together to solve these problems, which means that you have to understand how to protect yourself, your families, your communities, your churches, whatever it may be, because the government's not going to be able to do it. And the promises they've made to you, they will not be able to keep. We're going to have periods of inflation and deflation. In fact, I will argue you will have some of them simultaneously. The dollar is going to lose a significant amount of its value. And this is really one of the key themes. Most people in the United States, everything they own is denominated in dollars. Their houses, their bank accounts, their stock portfolios, what have you. As the dollar loses value, everything they own loses value. Yes, it may go up in nominal terms, but in terms of buying power, they're losing value. We'll talk about it here, but the dollar's lost about 40% of its value over the last 10 years. That means the purchasing power of everything you have is worth significantly less. That is one of the most pernicious forms of theft that is out there, and the government is going to continue to run the value of the dollar down. In fact, right now we're essentially facing a worldwide currency war that we're going to talk about, and all citizens around the world who don't understand how to use other currencies, how to use things like futures to protect themselves, they're going to find themselves in a very bad place. So we're going to talk about how to do that here. There's tremendous opportunity and tremendous risk. Always remember that every dollar that somebody loses in the market, somebody else makes. It doesn't just disappear. It can be you, it can be Goldman Sachs, but somebody's getting that money. And my preference is that it's you. So we'll talk about how to prepare for that. You're going to be either a victor or a victim. You cannot sit this out. I have always said to people there are two rational choices when it comes to trading and investing. You can either know what you're doing, understand how the markets really work, which, by the way, isn't what they teach you on CNBC or in the books and the tapes and all the rest of it. Really understand how professionals make money in the market, or stay out of the market, both of which are fair. Unfortunately, because what is going to happen to the value of our currency, because of the inflation and the deflation, the average person can't sit out anymore. Just like in real estate, where people didn't understand the risks that they were taking, and all of a sudden this tidal wave came in and wiped out 40% of their net worth, the exact same thing is setting up in the markets overall. We'll talk about that. The macroeconomy, why can't you sit it out? Because it affects everything. It affects your job. We are doing nothing constructive in this country to fix the unemployment problem. I'll talk more about that later. Social Security and Medicare are already bankrupt. We will also talk about that. What we call here the small bucket, the money you use for trading on a regular basis, as well as your retirement funds, all of these are at risk. And as I mentioned a moment ago, I think the best analogy is really with real estate. Back in 2003, 4, 5, even 6, we had this real estate bubble. But that's not what the average person saw. People saw real estate was a good investment, and real estate always went up over time because you know what? They're not making any more land. The problem was it was a huge bubble. And people did not do what they could have done to protect themselves against the bubble. You can actually buy options on the U.S. housing market that protect the value of your real estate, that make money when housing prices fall. The vast majority of people had no idea that even existed, much less did they actually go out and do it. And that's why people lost 40% of their net worth. They were playing a game that they didn't understand. The same thing is going to happen with the money they have in cash, the money they have in bonds, the money they have in the stock market. They are playing a game they do not fundamentally understand. Right now, as we mentioned in the last section, there is no fear in this market. There should be fear. There's a lot of things out there on the horizon that could cause this market to take a very big hit, but the average person is totally unprepared for that. During this session, we're going to talk about how to help you get yourself prepared. How do we know it was a housing bubble and it wasn't normal? A couple ways. If we look at what happened to housing prices really starting in about 2002, you had housing prices go up 90% while incomes only went up 2%. That is fundamentally not sustainable. In fact, by the way, if you're watching this in Canada, this is what you guys are doing right now. Look at it from another perspective. If you look at existing home sale prices, after inflation, how much do home prices go up a year? Well, between about 1890, okay, up until about 1995, 1996, over 105 years, after inflation, housing prices were up a total, not per year, a total of 10%. Housing has never been a good investment, okay? But then what happened starting in 2006? We had a bubble, okay? All of a sudden, housing prices, instead of basically being floating, this is an index of 100, all of a sudden housing prices go up 110% after inflation. Now in 100 years, they were up 10%. In basically 5 years, or 10 years, they'd more than doubled. That was an indication of a bubble. What happened since? We've dropped down significantly, but one thing you will notice is we are still much higher than we should be given historical averages. Housing has not bottomed, in my opinion. The reason housing is looking better is you can get a 3% mortgage. How long is that going to continue? What will happen to housing affordability as mortgage rates go up? The Federal Reserve is creating all this money. What happens when that money goes away? We're going to talk about that in this section, but it's not good. Okay, we'll leave it at that for right now. So if we kind of just wrap up what's happening with housing, housing was a bubble. It is not that housing prices are going to go back to their previous levels, not on an inflation-adjusted basis. Robert Shiller of the Case-Shiller Housing Index, the guy that identified the bubble back in the early 2000s, he has said to get back to housing prices that we saw a few years ago might take 50 years. Okay. Now, on an inflation-adjusted basis, or an inflation basis, a nominal basis, you may get there faster, but not inflation-adjusted, because the reality is that housing doesn't tend to increase over time. We are returning to trend, but we're not there yet. There's still a ways to go down, so there's still risk to the downside. Interest rates going up, again, we'll go into the specifics of that here later, and especially for those of you in an area where there's been a lot of people from Canada buying. We're here at Online Trading Academy in Phoenix. This is a big part of what's helping the Phoenix housing market. People in Canada are buying houses here because it's pretty cold in Canada. I actually was in Calgary a couple days ago. It's pretty cold in February in Calgary, right? They're buying houses here basically because they're house rich. There's a housing bubble in Canada. How do we know this? We know this because housing prices are up 140% and there's no increase in equity. All the money is being taken out in home equity lines of credit. Just like in the United States, people use their houses as ATMs, the mortgage equity withdrawals, and they used it to buy granite countertops and big screen TVs and second homes and the rest of it. That's what's happening with Canadians right now. Their bubble will burst, just like ours burst. And when that happens, they're going to have to start selling assets. They're going to lose assets. And all of those houses that they're purchasing down, say in the Phoenix area, are going to come back onto the market. That's not going to help either. All of this could have been protected. Had you simply bought put options on the Case-Shiller Housing Index, as the real estate prices fell, the value of your investments would have gone up, you would have been protected. But again, very few people did this because most people didn't even understand this was possible. And so much of what we really try to get across here at Online Trading Academy is if you don't understand the game you're playing, your chance of success is very, very low. And most people don't understand how investing works. Their view is that markets always go up. If you look at a chart of the 1990s and stocks just went up, you can buy and hold. You can dollar cost average. You can buy on the dips. That is not what markets normally do. Over the last 12 years, the market's essentially gone nowhere. And after the dollar's lost value and after inflation, the market's actually gone down significantly. But most people believe that markets over the long term go up. Unfortunately, that is not the case. So all of this could have been protected, but people didn't realize the risk they were taking. We talked about the Case-Shiller options. People didn't understand the risks or the solutions. And again, I think this is a preview of the coming financial crisis. There are things you can do to protect yourself. There are things you can do to profit from this. Most people will not take the necessary action because they won't understand it or they won't want to believe it.